Another YouTube channel. This is the final series of forecasting the USD against the Canadian dollar. Just want to highlight that at the moment we are in a live market session. All prices that we see here on TradingView are live. And as a quick disclaimer, I'm based here in the UK, so it's 2:30 in the afternoon here on the 3rd of January. And on my TradingView chart, I have a preset here of 9:30, which represents New York time. So the reason for me just to record this session in a live trading environment this afternoon is really just to highlight the things that I've been looking at over part one on part two of forecasting USD CAD. So what I'm going to do is just start by quickly just referencing part one, and then we can kind of go from there really. So one thing I want to start by is, this downward movement here that has kind of shaped this whole downtrend basically. And what we had was, in December, we had price that was failing to hold above this key level here, this 136. And we had a big displacement, lots of volume down on the Wednesday, which was on the 13th of December. Prices continued to be bearish on the Thursday, and then Friday we had this bottoming out. So, price began to consolidate and just hold just underneath this key level. So when I made the first recording, part one, I made it the weekend, and I was looking at, prices going into the week commencing the 18th of December, which in part one, I just called it the week leading up to Christmas. And what I was looking for in terms of a forecast was for price to hold above this key level, going into that final week leading up to Christmas. So the Monday, Tuesday, Wednesday, Thursday, and the Friday. And I was looking to take trades, based off some conditional expectations that I had, that price would trade down on Monday in the London session and give me an opportunity to buy, and it did do that. So I did get into this trade here, but we failed to close above this key level in the New York session here, which represents just this box here, and also in the Asian session we failed to close above this key level. So what happened was price started to trade lower, so I had to get out of my position because everything that I was looking for wasn't holding true, it wasn't valid. So I had to get out of my position, and that was Tuesday's trading. And then we had some consolidation going into Wednesday, and price continued to trade lower. At this point, I was, maybe price could actually get back above here on the Thursday, and then leading into the Friday. But so I did take a position here. But on the Thursday, again, I had to exit my position because price was just very bearish, and it continued to trade down into the Friday. So that week, price was very bearish. So everything that I was looking for, some of the conditional expectations that I looked for in price, they didn't materialize, and the market continued to trade lower. I was happy about that because I know what I'm looking for. So we had the price close lower, so underneath this key level, and then we had the 26th of December, which is here. So we had Christmas, and then we had Boxing Days trading, and price continued to drop lower, and it started to find support at this key level here, this 132. So I've been bullish, but I've just been waiting for the right conditions to actually show up in the market in price, the right type of expectations that I'm looking for to give me the opportunity to start building a position and trading in the direction that I've already been waiting in the market to. I've already been waiting for this direction to be confirmed. I've had to be patient. I've had to sit on my hands, so to speak. So once I saw this type of price action here on the Wednesday, and we was holding around this key level, and there was a lot of hot oscillations going back and forth around this key level, we had a nice drop here. Just going into the London session, we had a nice little drop in this 1 hour candle. I actually was able to, I didn't take this trade actually. I didn't take this trade. I waited, and I took this trade here in the New York session. I got into this trade and I held for this swing up because price began to confirm to me that it was now moving away from this key level. So all of this downtrend had finished. It was over, and there was a new change of direction, a new shift in the market. So I got into this trade because it gave me a great opportunity to get back in underneath the key level. Beautiful opportunity. So I took the trade here and I held it. I can't remember if I got back in here actually, but I think I just held my position here. And then we had this big displacement, big drop, big institutional candle here and here. And I held my position and I took some more trades here. No, actually, I didn't get back into this trade. I held onto my position here, and the market began to trade back up where it, in terms of where it came from, because it dropped so quick, so fast. Normally, when that happens and the market's bullish, the market will just snap back, and that's what happened here. So that was Friday. That was a great confirmation for me. I was very on the Tuesday, not the Monday, but because we had bank holiday, it was New Year's Day. But on the Tuesday, I was very bullish. And here I took 2 positions. Here because I just had a real gut feeling, an intuition that the market's going to rally. It's going to move higher. And it was because of this move. And I knew that they'd built a position. The large institutions, the interbank market had built a position here. They brought price back down to a discount. And then they built a position and they took the market away. There's a lot of displacement here and velocity. They just want to take this market back up to where they brought it from. And I was able to read into this and understand what was going on. So I knew on Monday that because we've already been down here, they're not going to waste time bringing the price back down to here. They're going to want to move this market now and get going with this market. So I took some positions here, held the trade. Beautiful trade. We get a nice close, nice bullish day here. Big bullish day here. So price is moving away now. It's moving away from this key level. It closes above this key level, holds. And then this is where we are at the moment in terms of the price action. This is live market data, a live trading session. So this is a live recording in a live market. And we can see how price is just bobbing up and down. So I took 2 trades yesterday. I got into a trade this morning just underneath this level here where it says opening price. There was quite a bit of volatility this morning, a lot of oscillations back and forth. But again, very bullish and just expecting price to trade higher. And the dollar again is trading higher as well. So this is rallying alongside the dollar index. So just in terms of my expectations moving forward, I'm very bullish, I'd say, for January on this particular instrument. It has been trading down. There's levels that it hasn't had the opportunity to trade back up into these candles. You've got a big area here where there's imbalance. I'm not going to go into great detail in terms of what I mean by that. You'll find that in part 1 and part 2. Just me break that down. And we've got the dollar that's also pushing higher at the moment because it hasn't had the opportunity to trade higher over the last couple of weeks. And we've got the pound USD that's weaker. We've got the euro USD that's weaker also. And that's just been offset by the strength in the dollar. So really, I'm just going to be really sticking to my forecast, which was way back here. So expecting price to close above this 134 here and start to trade higher up into this key level. And that will conclude my initial forecast for the USD CAD, going into January, mid-January, and then I'll assess where I am, around about the back end of January, just to see if there is still momentum and drive to take this market higher. But at the moment, I'm just more focused on 134 and 135. It's a nice range. It's 100 pips. It's a 100 pip range when you do it from this level to this level. It's a nice 100 pip range. It's a nice profit range as well. I've made some profits on this already, so I'm very happy about that. And we'll see how everything pans out. But for now, my focus is 134 and 135, and then what I'll do is I'll assess where the market is if these levels are hit, which I believe they will be. Throughout it's still very early. It's only the 3rd of January, so there's still a lot of information that has to be printed, macroeconomic information. And normally January, February, March are really busy times in the Forex market. Some great moves, some great price action. So if you're new to this channel, I encourage you to subscribe, hit that notification bell, drop me a like, drop me any comments. I'll be more than happy to get back to you. If you like this type of content, if you're a trader, if you're new to trading, hopefully you find these videos very valuable. And I'll always say I'm not trying to predict the market, but just forecast future price action. And I have a way of doing that. I have certain tools, certain quantitative tools that allow me to do that with caution, obviously, and with a level of discipline and prudence. And yeah, I look forward to seeing you in future videos. That's it for me from now.